Welcome back, everyone. Today we're diving into the core investment principles of one of the greatest investors of all time, Warren Buffett. Let's explore what makes his approach so successful. Now, you might be thinking, another Warren Buffett video? What more is there to learn? Trust me on this one. We're going deep into the heart of Buffett's strategies, breaking them down into actionable insights you can use to level up your own investment game. Whether you're just starting out or you've been in the game for a while, these timeless principles will help you navigate the complexities of the market and build long-term wealth. So, buckle up, grab your notebooks, and let's get started. Warren Buffett's unflinching attitude towards market volatility is remarkable. While most panic during market dips, Buffett sees golden opportunities. He knows short-term fluctuations are often irrational, driven by fear and speculation. When high-quality companies go on sale, he buys more at a bargain. Instead of fearing volatility, he embraces it for amazing deals. Eventually, a company's true value will be reflected in its stock price. In a world obsessed with instant gratification, Warren Buffett stands out for his unwavering commitment to the long game. He's not interested in get-rich-quick schemes or chasing the latest hot stock tip. Instead, he focuses on building lasting wealth through long-term investing. Buffett's philosophy is deeply rooted in the power of compounding, which he often refers to as the eighth wonder of the world. Compounding is like a snowball effect in finance. When you reinvest your earnings, they generate their own returns. And those returns generate even more returns. Long-term investing requires patience, discipline, and a focus on the bigger picture. By staying the course and letting the magic of compounding work its wonders, you can achieve remarkable financial growth over time. Even with all the hype surrounding the stock market, Warren Buffett remains cautious and calculated. He understands that a company's stock price doesn't always reflect its true worth, especially in today's market, where valuations can swing wildly. Buffett is a firm believer in the importance of valuation. He's not afraid to walk away from a deal if the price isn't right. Overpaying for an asset can significantly impact your returns, no matter how great the underlying business is. By staying grounded in fundamentals and refusing to overpay, Buffett protects his portfolio from potential bubbles and ensures he's buying assets at a price that sets him up for long-term success. Warren Buffett is all about long-term investing and sensible valuations. What does he look for in a company? He focuses on value and fundamentals, seeking companies with a durable competitive advantage like Coca-Cola, Apple, or Geico. These businesses have strong brand recognition and a proven track record of generating profits. By buying at a discount, Buffett stacks the odds in his favor, creating a portfolio built to weather market storms and deliver consistent returns. We've covered market volatility, long-term gains, valuations, and fundamentals. But there's one more crucial ingredient in Warren Buffett's recipe for success: patience and discipline. Buffett is a master of emotional control, rarely swayed by market noise or short-term fluctuations. He understands that investing is a marathon, not a sprint, and that true wealth is built gradually over time, not overnight. This unwavering patience is what allows him to capitalize on opportunities most investors miss. While others panic during market downturns, Buffett calmly assesses the situation, sticks to his strategy, and even uses the dip to buy more of his favorite companies at discounted prices. This unwavering commitment to his principles is a key factor in his remarkable success. And there you have it, folks. Warren Buffett's core investment principles that have stood the test of time. Remember, investing is a marathon, not a sprint. Stay patient, stay disciplined, and focus on value. By embracing volatility as an opportunity, prioritizing long-term gains over short-term profits, and remaining grounded in fundamentals, you can navigate the complexities of the market and build a portfolio designed for lasting wealth. Thanks for watching, and don't forget to like and subscribe for more insights.